Hey everybody, it's Norris with the Norris Group. It is Friday, March 9th, and would you prefer micro-living or co-living? That and much more as we cover the biggest headlines in real estate. Up on the radio show this week, Bruce interviews me. We talk about the Think Realty magazine that we were just featured on in the cover. We talk about the hard money loan business and us going into Florida. We talk about our portal and some of the cool things to expect in the next coming year inside the portal and some of the really cool topics we'll be covering. Don't miss it this week on the radio show and podcast. CoreLogic reported a 6.6% increase in home prices in January for the 6th month in a row. Saw some increases nationwide. It's the 9th year of a bull market and stocks are up over 300 points today after a stronger than expected 313,000 jobs were created, bringing unemployment down to 4.1%. Wage growth, well, it didn't keep up. It's only 4 cents up, but this has also sparked lots of talks about interest rates going up this year, which we expected. And flipping increased to its highest in 11 years as over 200,000 homes were flipped. So this is the second year in a row it's been pretty high, so flippers are busy. Approximately 1.4 million Americans lost the interest rate incentive to refinance their mortgage in the first 6 weeks of 2018, according to Black Knight. Whether or not a refinance makes sense has a lot more to do with just a lower interest rate. The Mortgage Bankers Association shows that mortgage applications for refinances held steady throughout January, even as rates jumped. But in February, they turned sharply down something like 10% from last year. As you might expect, mortgage applications for adjustable rate mortgages are up 6.7% in the most recent week. It's said that the MBA said, and it's gone up every week in 2018. And as prices increase and interest rates increase, we might be expecting more creative product to start emerging, so we'll see. San Francisco home buyers must now make over $300,000 a year to afford a median-priced home in the city. In Sacramento, an entry-level home can be yours for salary as low as $40,000, according to Sacramento's KCRA Channel 3. They looked at median home sales price from Trulia for 20 Sacramento neighborhoods, 20% down payment, a 30-year mortgage at 4.25% interest rate, included property taxes and insurance when they were creating all this, and the salary required to purchase that median price was backed up to create this statistic. Well, in almost every neighborhood, homes were attainable for salaries under $50,000 a year. The most expensive neighborhoods in Sacramento to afford a median-priced home barely broke the $100,000 mark, so 1/3 of what it costs to live in San Francisco. Despite all the talk on home affordability being down, Trulia says housing is actually more affordable now than it was 40 years ago. Trulia constructed an affordability score a little different, comparing the highest price the median household could afford with median actual home prices in each year. So a household's highest affordable price is its maximum buying power with a 20% mortgage down payment. Isn't that responsible? Anyway, the studies show that nationally, homes are the most affordable they've been in the last 40 years, and the median household could afford a home 1.5 times more expensive than the median home price. Of course, being able to afford a median-priced home and finding one are two different things. Considering the story we just did on San Francisco, I think San Francisco might even be messing up your numbers, so it just depends on where you live. The National Association of Home Builders today lauded efforts by the Trump administration and Congress to roll back onerous regulations that hurt home building firms, which ultimately forces the consumer to pay a lot more when they're buying new houses. NAHB estimates government regulations at all levels accounts for nearly 25% of the final sales price of a new single-family residence. I didn't think it was actually going to be that much. So the National Association of Home Builders would also like to see some OSHA rules changed, the EPA's lead renovation, repair, and repainting rule revised, which even applies to real estate investors, as you know, and the Endangered Species Act regulations revisited to help cut costs. Government entities are really loving talking about affordability and housing shortages and this and that, but they got to put their money where their mouth is and really change some of the stuff, and we'll have to wait and see if they do so. Starcity has an answer to home affordability, and the San Francisco startup urges us to reimagine home. Not only is buying in San Francisco expensive, we all know rents are crazy. So the answer is communal living and dorms, of course. Starcity has already opened 3 communal properties with 36 units, with 9 more in development and a waiting list of 8,000 people. The company is buying a dozen more properties, including one-star hotels, parking garages, office buildings, and old retail stores, so maybe they'll be the one that finally does something with that closed-down Gotchaks that's been sitting in that mall for like 10 years. I digress. These are not micro units, nor exactly like the common co-living model that we've been talking about for the last couple weeks on the radio show. Residents in their model get a bedroom of 130 square feet to 220 square feet and 1 bathroom for every 2 to 3 bedrooms. Rooms are furnished and the services around it include high-speed internet, cleaning services every other week, community events, and a house concierge. So Some of that is similar to the common co-living concept, but many of the buildings will feature some upgraded units with their own private bathrooms, as well as some will have their own mini kitchens. So this is a lot more like the project in Rhode Island called, I think it's called the Arcade Providence. But notice on their website, Starcity is definitely pushing the lifestyle of communal living. You really have to check out their website. Homework assignment for this week, I want you to check out 3 websites: Common, Starcity, and Podshare. All of them are going to be, if not already, operating in the Los Angeles space, and I want to know which one you would live in: micro-living, co-living, or communal. Love to hear what you have to say. If you're on YouTube, please leave a comment below, and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video, and if we missed something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Upcoming events: March 14th, Wednesday this week, we're going to be in Sacramento doing Stay Put or Cash Out with NorCal REIA. It's been a year since we've been to Sacramento, so looking forward to see you there. But we're hanging out till Saturday, where we do Cashing In on a Boom. Quadrant 4 strategies for buying real estate in today's market. You won't want to miss it. We've got special guest Property Radar showing us behind the scenes of their product, which as a marketer, we use it every day, and it's pretty phenomenal. It's crazy. Anyway, April 4th, Stay Put or Cash Out, we'll be doing at the Inland Valley Associations of Realtors. April 19th, we'll be doing it at Pasadena Phoebe. And finally, May 9th, we'll be doing it at OCRE Forum. So all over Southern California. For more information on hard money loans, including fix and flip, buy and hold, and new construction, check out thenorrisgroup.com. Check out our 6.9% rental rate, and definitely keep your eye out for information on Florida. We will start lending there later this month. And for more information on passive investing with trust deeds, check out tngtrustdeeds.com. With that, have a fantastic weekend, and we'll see you next week.